You should be proud of yourself that you have made it so far. Welcome to the 6th video of ZDR Challenge video series. In this video, we will be tackling a very important aspect for business, which is financial sustainability. So by now you should be asking yourself some questions like, is my company going to be self-sustainable? Meaning, am I going to generate enough money to sustain? Am I going to make profits? I know that some of you guys might not be really fans of numbers, but I promise you, we will be making it as simple as possible for you to understand the whole concept of finances. In order to assess your idea from a financial perspective, you need to do some projections into the future. You can keep track of your financials through income statement or profit and loss statement. The profit and loss statement is a very basic mathematical equation. Basically, you calculate what you have gained this month and you minus it from the costs you have spent. If it's in positive, that means you have profit. If it's in negative, that means you have some losses. So we start by calculating our income. And this is done in a very simple way. You just need to calculate how much do you make per piece and multiply it by the number of pieces you sell per month. Moving forward, you need to also understand what are the costs and how much money you're spending. So there are different types of costs. We will start by direct costs. In case only you're doing a product and not a service. For a product, the direct costs will be divided on different items, including how much did the raw material cost, how much the production itself cost, and how much the human resources cost. So to clarify this, let's take an example of a factory that's producing bags and purses. So to start with, we will need raw material, which includes leather and zippers. Second, we will need human capital, including designers to design the bag, and then workers to assemble the bag together. And finally, we will need a place to store the bags until they are sold. We will deduct the income from the direct cost of production, and the number we get is called gross profit. The next step is going to be calculating any other costs that were spent by the business that are not related to the production during that month, including bills of water and electricity, transportation, or any other thing. The third step is subtracting the gross profit from any other indirect costs. If the final number is positive, then you have a profit. If the final number is negative, then you have loss. Here are a few tips to help you with your financials. So to start with, you need to be cautious with your financial projections. Usually, small businesses take some time to start generating income. So know exactly how much you're planning to sell and if this is really a reality or not. Also, it's very important to do some financial projections. So you need to make an income statement projection for a minimum of 1 year and a maximum of 3 years. A very important stage for any business is to be waiting for the break-even point. So the break-even point is basically when your net income is equal to 0, when it's subtracted by the income of this month. This means next month you can start making profits. Many judges and investors will be looking for this point at your pitch, so make sure to talk about it when you're pitching your idea. I hope that this video was informative and it will help you find your way through finance. Hopefully, you will smile when you make your very first profit. See you at the next video.